If the price crosses above the trend magic line after a pullback, it could signal a continuation of the uptrend, offering an additional entry point. A position could be opened in the direction of the trend after confirming the momentum strength and seeing the price move in the same direction as the pivot point. It's time for a new TradingView indicators review. Let's see what we've got for you this month. I'll be covering the key features of each of the 5 indicators and also sharing strategy rules, so make sure to stick around. These insights could really help boost your trading. Our first reviewed today's tool is called Trend Magic by Kivenko's Bilgic. The Trend Magic indicator is designed to help identify potential trends and key price levels. The indicator uses the CCI to determine whether the market is trending upward or downward. It calculates upper and lower thresholds using ATR to factor in market volatility. When the CCI suggests an upward trend, the indicator sets a support level, while for downward trends, it establishes resistance. The plotted line serves as both a visual guide for trend direction and a potential level for price reversals. A potential strategy using the Trend Magic indicator could look like this. When the Trend Magic line turns blue, indicating a bullish trend, you could consider entering a long position if the price is above the line and the CCI confirms an upward trend. The line acts as dynamic support, so you might set your stop loss just below the line, adjusting it as the trend progresses. If the price crosses above the Trend Magic line after a pullback, it could signal a continuation of the uptrend, offering an additional entry point. On the other hand, when the Trend Magic line turns red, indicating a bearish trend, you could look for short opportunities. If the price is below the line, consider entering a short position. Again, the Trend Magic line serves as dynamic resistance, so you might place your stop loss just above the line, moving it lower as the downtrend continues. A cross below the Trend Magic line after a pullback could also signal a good entry for a short. Next on the list is Momentum-Based ZigZag, with QQE by Peter O. The Momentum-Based ZigZag indicator offers precision and adaptability by using momentum analysis to detect trend reversals and plot pivot points. Unlike traditional zigzag tools, it dynamically adjusts to market conditions with indicators like MACD, moving averages, or QQE. This makes it highly effective in volatile markets. A standout feature is its non-repainting nature. Pivot points and zigzag lines are drawn at detection points, with optional color coding to visualize momentum strength and direction. It's versatile for strategies ranging from reversals to trend continuation setups. A potential strategy using the momentum-based zigzag indicator could focus on trend reversal and continuation setups based on the plotted pivot points and momentum strength signals. When the price moves to a new pivot point and the momentum indicator confirms strength in the trend direction, it could signal the start of a new trend. A position could be opened in the direction of the trend after confirming the momentum strength and seeing the price move in the same direction as the pivot point. For exits, a position could be closed when the price forms a new pivot point in the opposite direction, or if the momentum strength gauge shows a significant weakening, suggesting the trend may be losing steam. Our next tool is the Volume Profile/Fixed Range Indicator. This indicator helps traders analyze market structure by visualizing price levels with the highest traded volume. It calculates volume distribution over a selected range of bars, identifying areas of high activity, and the point of control, POC, the price level with the most traded volume. This tool divides the range into customizable segments, distinguishing between bullish and bearish activity to show which price levels had significant participation from buyers or sellers. The value area, where a set percentage of total volume is concentrated, default 70%, is also displayed, highlighting key price zones where the market is likely to react. The POC is marked with a customizable line and optional label, indicating the price level with the highest volume within the range. This feature is useful for both trend following and mean reversion strategies. Customization options include defining the bar range, adjusting the granularity of the volume distribution, setting the volume percentage for the value area, and customizing the colors for bullish and bearish volumes, as well as the POC and value area. The indicator might seem complex for inexperienced traders, so I'll be doing a detailed review in upcoming videos. The strategy using the Volume Profile/Fixed Range Indicator could focus on identifying key price levels for entries and exits based on volume concentration and the POC. When the price is near the POC, it could indicate the most traded price level within the selected range. If the price starts to move away from the POC, it might signal the continuation of the trend, and a position could be opened in the direction of the move. If the price approaches the upper or lower bounds of the value area, this could indicate strong support or resistance, respectively. For exits, a price reversal near the POC or value area could serve as a signal to close the position, especially if volume starts to decrease, suggesting that the price may struggle to continue in the current direction. Additionally, if the price reaches a level of high volume concentration and fails to break through, it may indicate a potential reversal, signaling the time to exit the trade. Our next tool is called the Range Box Indicator, designed by nephew Sam. It provides an intuitive way to visualize key price levels during specific trading sessions. This tool automatically identifies the high and low price levels within a user-defined time range, plots them on the chart, and extends these levels into subsequent periods for continued relevance. Additionally, it calculates and displays the midline of the range for balanced price analysis. The indicator is highly customizable, offering features like optional background shading for the range, adjustable line colors and thickness, and the ability to extend levels beyond the initial session. These options make it suitable for both intraday and swing traders who rely on clear visual cues for support, resistance, and potential breakout levels. A potential strategy using the range box indicator could revolve around breakout trading or range-bound trading, depending on market conditions. When the price approaches the upper or lower range boundary, it could signal a potential breakout or reversal, especially if the price action has been contained within the range for a significant period. A long position might be considered if the price breaks above the upper range level, particularly if volume increases and the midline indicates an upward bias. Conversely, a short position might be taken if the price breaks below the lower range level, with the midline showing a downward trend. For exits, if the price fails to break through the range boundary after a breakout attempt, it could signal the end of the move, suggesting it's time to exit the position. Next up is the Volatility Gaussian Bands, Big Beluga indicator. This tool analyzes market trends and volatility by using a Gaussian filter to smooth price data and create dynamic upper and lower bands that adjust to market conditions. These bands provide signals for potential trend changes. It also includes trend strength gauges that measure uptrend and downtrend strength based on the Gaussian midline. Triangle markers highlight rapid trend changes when the market shifts quickly, but the midline remains consistent. These retest signals highlight areas where the price might revisit the Gaussian line, offering additional confirmation of trends. A strategy with the Volatility Gaussian Bands indicator could focus on trend following and reversals based on dynamic bands and trend strength signals. If the price crosses above the upper band, it could signal an uptrend, especially if the trend strength gauge shows strength. A long position may be considered if the price stays above the upper band for several bars. A triangle marker indicating a rapid trend change could suggest an entry or position adjustment. Retest signals can further confirm the trend if the price crosses back through the Gaussian midline or band. For exits, consider closing the position when the price crosses the Gaussian midline again, or if the trend strength gauge weakens significantly. Let me know which indicator you like best and the strategy you'd use. Also, don't miss our previous video, where we cover an unconventional yet highly effective trendline breakout indicator with a full strategy.